Boliden's fourth quarter and year-end report for 2025 characterize a period of structural evolution. The data indicates a fundamental stability across its two primary business areas, business area mines and business area smelters, supported by a macro environment defined by exceptionally strong precious metal valuations. The reporting period highlights a transition from an intensive capital expansion phase toward a period of operational consolidation, particularly following the acquisition of major assets from London Mining earlier in the year. The fourth quarter of 2025 demonstrated significant top-line growth, with revenues reaching 28,131 million SEK, representing a substantial increase from the 25,785 million SEK reported in the corresponding period of 2024. This increase is primarily attributable to a combination of higher realized metal prices, particularly for gold and silver, and the expanded production capacity resulting from the integration of the Saminkor and Zinkgruvan mines. The operating profit, EBIT, for the quarter was reported at 5,798 million SEK, a sharp rise from 4,098 million SEK in the previous year. However, the most salient metric for assessing fundamental operational health remains the operating profit excluding process inventory revaluation, PIR, which totaled 4,061 million SEK for the fourth quarter, compared to 3,814 million SEK in Q4 2024.
The following key metrics highlight the financial results for the quarter compared to the previous year and current estimates. Revenues: SEK 28,131 million in Q4 2025, up from SEK 25,785 million in Q4 2024, with full-year estimates reaching approximately SEK 100,000 million. Operating profit: SEK 5,798 million in Q4 2025, compared to SEK 4,098 million in Q4 2024. Operating profit excluded PIR: SEK 4,061 million in Q4 25, compared to SEK 3,814 million in Q4 2024, with a 12-month rolling figure, October-September, of SEK 10,445 million. Free cash flow: SEK 2,689 million in Q4 25, a decrease from SEK 4,264 million in the prior year quarter. Earnings per share, EPS, SEK 15.31 in Q4 25 versus SEK 10.95 in Q4 2024. Proposed dividend: the Board of Directors has proposed an ordinary dividend of SEK 11.00 per share. Net debt/equity ratio, 25% for Q4 2025, compared to 24% for the same period in 2024.
The reporting of earnings per share at SEK 15.31 for the quarter reflects not only the operational improvements, but also a significant one-time positive adjustment related to the Rönnskär smelter. This adjustment, totaling approximately 400 million SEK, resulted from a final assessment of metal recoveries in the tank house that was destroyed by fire in 2023. When analyzing the free cash flow bridge, it is evident that the intensive capital expenditure programs have pressured liquidity, with free cash flow for the quarter decreasing to 2,689 million SEK from 4,264 million SEK in the prior year. This reduction stems from the heavy investment cycle at the Ada smelter and the ongoing reconstruction of the Rönnskär facility, alongside the financial integration costs associated with the London asset acquisitions. The Board of Directors' proposal to distribute an ordinary dividend of 11 SEK per share serves as a signal of confidence in the company's future cash generation potential as it enters a lower-intensity capital expenditure phase in 2026. This payout is supported by a robust balance sheet, where the net debt-to-equity ratio was maintained at 25%, despite the significant cash outlays for acquisitions and internal growth projects during the fiscal year.
A pivotal aspect of the year-end report is the guidance for 2026, which forecasts a reduction in total capital expenditure to 15 billion, down from the 15.5 billion estimated for the full year 2025. This reduction marks the transition of several mega projects from the high-intensity construction phase toward commissioning and ramp-up. The 2026 capital expenditure of 15.0 billion is distributed across the following strategic focus areas: mine sustaining, 6.5 billion allocated to waste rock mining, processing, and ongoing dam raising to ensure GISTM compliance. Expansion in projects, 8.5 billion dedicated to the completion of the Ada expansion and the restoration of the Rönnskär copper tank house. One of the most significant insights gleaned from the 2025 performance is the elevation of gold and silver within Boliden's revenue and earnings sensitivity profile. While historically viewed as byproducts of copper and zinc extraction, precious metals are now explicitly categorized by management as the third and fourth most important metals for the company's financial health. The gold rush of late 2025, which saw gold prices reach historic levels near $4,000 per ounce, has acted as a critical hedge against lower head grades in the base metal segment. The sensitivity of operating profit to precious metal prices has increased as the company has optimized recovery rates at its smelters and targeted gold-rich zones in its mining operations, such as the Konkberg mine in the Boliden area. In the third quarter of 2025, higher precious metal prices were cited as a primary reason that core earnings exceeded analyst consensus, despite maintenance shutdowns and currency challenges. This trend continued through the fourth quarter, providing a powerful earnings tailwind that partially offset the impact of a weaker US dollar in relation to the Swedish krona and the euro.
The mining segment has faced a challenging period of mine sequencing, characterized by lower head grades at several key units. Management has noted that while production volumes have remained relatively stable, the underlying metal content has been pressured by the transition into lower-grade sections of the primary ore bodies. However, the integration of newly acquired assets and the development of satellite deposits like Liikavaara offer a pathway to stabilization and eventual growth in 2026 and 2027. Aitik, Boliden's largest open-pit copper mine, remains the cornerstone of the mining segment, despite experiencing all-time low copper grades during the 2025 fiscal year. The 2025 milled volume reached 39 million tons, and while this represents strong throughput, the grade profile necessitated a significant focus on stripping and waste rock management to prepare for future higher-grade areas. For 2026, Boliden has guided for an increase in throughput to 41 million tons, with copper grades expected to improve to an average of 0.18%, specifically weighted toward the second half of the year. However, production remains limited by a diorite intrusion that has complicated mining sequences. The completion of the major dam reinforcement project at the end of 2024 has cleared a major capital hurdle, allowing the site to focus on operational efficiency and the ramp-up of the nearby Liikavaara deposit, which contributed 25% of produced tons in 2025.
Garpenberg continues to be Boliden's most efficient mining unit, characterized by high productivity and record mill volumes. The mine has successfully navigated ground condition challenges that forced a reprioritization of some mine production in early 2025. A key strategic victory for the unit was the acquisition of an expanded environmental permit in late 2025, which allows for increased production even if an appeal process is ongoing. The guidance for 2026 projects a throughput of 3.7 million tons, with zinc grades at 2.9% and silver at 95 grams per ton. While these grades represent a slight decrease from previous levels, the increase in milled volume is expected to maintain high levels of metal output. The long-term plan for Garpenberg remains the expansion towards a sustainable throughput of 4.5 million tons per annum, supported by ongoing optimization of the mill and ventilation systems. The Kevitsa mine in Finland, which produces copper and nickel, faces a significant financial challenge following the Finnish Parliament's approval of increased mining and electricity taxes in late 2025. These regulatory changes are estimated to result in an annual cost increase of 20 million to 30 million euros for the site. CEO Mikael Staffas has indicated that these tax hikes will necessitate a reassessment of future investment attractiveness in Finland, potentially impacting the site's expansion plans. Despite these fiscal pressures, Kevitsa maintains stable operational performance. In 2025, the mine milled 10.2 million tons of ore, and the environmental permit renewed in July 2025 allows for up to 10.5 million tons per annum. The 2026 guidance anticipates a copper grade increase to 0.24%, while nickel grades and throughput are expected to remain consistent with 2025 levels.
The Tara zinc mine in Ireland, which resumed production in late 2024, has been in a ramp-up phase throughout 2025. While the mine has achieved significant milestones in its restart, the 2025 milled volume of 1.44 million tons was slightly lower than initial communications due to slower development of certain mining areas. The target for 2026 is to increase milled volume to 1.8 million tons, with a zinc grade of 5.6%. Management maintains that the long-term target of 2.2 million tons per annum remains achievable by 2028, as the mine sequencing moves into higher productivity zones. The successful reintegration of Terra is a critical component of Boliden's strategy to secure zinc concentrate for its own smelter network, particularly as global concentrate markets remain tight. The acquisition of the Somincor, Neves-Corvo, and zinc Gruvan mines from Lundin Mining has significantly expanded Boliden's footprint in Europe. Since the consolidation in April 2025, these assets have performed according to plan, and the integration process was formally concluded in late 2025 as the units became fully integrated into Boliden's management and reporting systems. The 2026 guidance for these acquired assets includes the following: Somincor, copper ore, milled volume of 2.3 million tons with a 1.7% copper grade, focusing on Lombador North development. Somincor, zinc ore, milled volume of 2.2 million tons with a 6.7% zinc grade, focusing on zinc expansion optimization. Zinc Gruvan, zinc ore, milled volume of 1.1 million tons with a 7% zinc grade, focusing on the Dalby mineralization study. Zinc Gruvan, copper ore, milled volume of 0.3 million tons with a 2.0% copper grade, focusing on tailings facility expansion.
The smelting segment has delivered stable production in the fourth quarter, benefiting from the absence of major planned maintenance and strong performance at its Finnish units. However, the segment's outlook is dominated by the completion and ramp-up of two major infrastructure projects that have faced technical and timeline challenges. The expansion of the Ada zinc smelter in Norway, a multi-year project designed to increase capacity to 350 kilotons per year, has encountered delays in its final stages. In December 2025, Boliden announced that hot commissioning had been prolonged by 2 months, with the first feed now expected in the first quarter of 2026. Despite the delay, the economic case for the expansion remains robust. Once at full production, the project is expected to increase annual EBITDA by approximately €150 million based on Boliden's long-term planning prices. The project also introduces new capabilities, such as the production of Ada leach product, for which there is strong market interest. However, the delay has contributed to some budget overrun, which is included in the 2025 and 2026 capital frameworks.
The reconstruction of the copper tank house at Rönnskär is progressing according to the revised schedule following the 2023 fire. As of late 2025, the project was 60% complete, with a planned ramp-up in the second half of 2026. Once fully operational, the new facility will restore annual copper cathode production capacity to 230 kilotons and is expected to increase annual EBITDA by 1.2 billion Swedish kronas compared to the current interim model of anode sales. A significant financial event in the fourth quarter was the 400 million Swedish kronas positive adjustment to operating profit related to metal recovery assessments at Rönnskär. This non-recurring gain reflects a final evaluation of metal trapped in the old facility and an adjustment of estimated recoveries in the new material flows. Furthermore, Boliden continues to receive insurance proceeds related to the fire, with 2,000 million Swedish kronas total anticipated in 2025, of which the majority has already been received. The Finnish smelters demonstrated robust operations throughout 2025. Harjavalta achieved record-high production of copper cathodes in the fourth quarter, fully overcoming the technical issues in its nickel line that had impacted earlier periods. Kokkola also maintained stable production with a favorable feed mix. For 2026, the impact of planned maintenance shutdowns across the smelter segment is estimated at minus 450 million Swedish kronas, a slight improvement from the minus 500 million Swedish kronas impact forecast for 2025.
Analysis of positive aspects following the Q4 report. The analysis of Boliden's year-end position reveals several areas of strength that position the company favorably for the 2026-2027 period. Operational resilience and strategic rebounding. The ability of Boliden to maintain a stable operating profit excluding PIR in the face of all-time low grades at Aitik and significant maintenance activity in early 2025 is a testament to its operational resilience. The recovery of the nickel line at Harjavalta and the successful restart of Tara indicate a management team capable of solving complex technical and logistical problems. The proposed 11 dividend is perhaps the clearest indicator that the company has emerged from its most challenging operational period with its financial strategy intact. Successful portfolio diversification. The consolidation of Somincor and Zinkgruvan has effectively transformed Boliden from a purely Nordic miner into a more diversified European producer.
This diversification reduces geographic risk and provides the company with greater exposure to different geological styles and metallurgical profiles. Furthermore, the strategic focus on precious metals as an earnings stabilizer has proven highly effective during a period of volatility for base metals. Strategic positioning. Boliden's application for the Nautanen deposit to be designated as a strategic project under the EU Critical Raw Materials Act demonstrates a proactive approach to securing domestic supply chains for metals essential for electrification. The ongoing investments in cathode production at Rönnskär and expansion at Odda ensure that Boliden will be a primary supplier of these materials to the European market for decades. Disciplined financial management. The guidance for reduced capital expenditure in 2026 suggests that Boliden is moving toward a more cash-generative phase. By maintaining a net debt-to-equity ratio below 30% even during its peak investment year, the company has demonstrated a conservative and effective approach to leverage. The focus on mine-sustaining capex of 6.5 billion SEK ensures that the core assets remain competitive without overextending the balance sheet on speculative greenfield projects.
Analysis of negative aspects and ongoing risks. Despite the positive year-end results, the company faces several headwinds that could impact its performance in the near to medium term. Persistent grade compression in mining. The decline in head grades at Aitik and several other mines is a structural reality that requires the company to move increasingly larger volumes of rock just to maintain historical metal output. While 2026 guidance suggests a grade improvement at Aitik in the second half of the year, there is no guarantee that geological conditions will not present further surprises, such as the diorite intrusions that have already impacted throughput. Project execution and delay risks. The delays at the Odda expansion project serve as a reminder of the complexity of brownfield smelting projects. While a 2-month delay is manageable, further setbacks could impact the company's ability to achieve its EBITDA growth targets for 2026 and 2027. Similarly, the ramp-up of the Rönnskär tank house in late 2026 will be a critical execution milestone that carries inherent technical risk. Regulatory and tax burdens. The fiscal environment in Finland is becoming increasingly challenging, as evidenced by the significant tax hikes affecting Kevitsa. If other jurisdictions in Boliden's footprint were to follow suit, the company's cost curve could shift upward, making its operations less competitive compared to global peers. Furthermore, the complexity of environmental permitting, while recently successful at Garpenberg, remains a potential bottleneck for future mine expansions or the development of the Nautanen deposit. Macroeconomic and currency volatility. Boliden remains highly sensitive to global trade barriers and economic recovery in major markets like China and the US. The discussions surrounding trade barriers for copper and other metals can impact market sentiment and pricing dynamics. Additionally, the company's high sensitivity to the USD means that a sustained period of dollar weakness would put significant pressure on realized margins in SEK, even if metal prices remain high in USD terms.
Future geological and exploration outlook. The 2025 update on mineral resources and mineral reserves reveals the ongoing battle between mining depletion and exploration success. Exploration costs in 2025 totaled SEK 969 million, an increase from SEK 929 million in 2024, reflecting the company's commitment to extending its mine life cycles. Mineral Reserves and Resources 2025 Summary. The changes in mineral reserves and resources for 2025 across Boliden's primary mining units are as follows. Aitik. Mineral reserves decreased by 4% due to mining depletion, while measured and indicated M&I resources increased by 36% following resource pit optimization. Boliden area. Mineral reserves increased by 13%, driven by a high gold price assumption. M&I resources increased by 32% due to successful exploration and economic reevaluation. Garpenberg, mineral reserves decreased slightly by 1% due to mining depletion, but M&I resources saw a significant 84% increase from exploration drilling. Kevitsa, mineral reserves decreased by 9% primarily from mining, while M&I resources grew by 2% due to updated economic assumptions. Tara, mineral reserves increased by 20% following the conversion of resources, while M&I resources decreased by 55% as a direct result of that conversion. The significant increase in measured and indicated M&I resources at Garpenberg, plus 84%, and Aitik, plus 36%, suggests that both mines have substantial potential for future reserve conversion, provided that metal prices and technical assessments remain favorable. The reporting of Boliden as a new satellite deposit to Kristineberg further demonstrates the success of regional exploration around existing infrastructure.
The development of the Natanen deposit, located north of Aitik, is particularly critical. In 2025, indicated resources at Natanen increased by 51% and inferred resources by 173%. If the strategic project application to the EU is successful, this could accelerate the timeline for bringing this high-grade mineralization into the Aitik production stream, significantly improving the unit's overall grade profile in the late 2020s. Conclusion: the Boliden Q4 2025 and year-end report portrays an organization at a strategic crossroads. By successfully navigating a period of intensive investment and operational disruption, the company has built a platform for significant growth. The integration of the London assets and the expansion of the smelter network ensure that Boliden will remain a central player in the European metals market. However, the transition to 2026 is not without risk. The company must prove that it can manage the geological challenges of its mature mines while delivering on the promise of its multi-billion SEK investments in Ada and Ransker. The gold rush of 2025 provided a welcome windfall, but long-term success will depend on the company's ability to maintain its position as a low-cost, high-efficiency producer of copper and zinc.